Welcome everyone to Daily Mortgage Rates Live with the Mortgage Calculator. We'll wait just a few minutes here to get started, give everybody a chance to hop on. So just hang tight with us. I see some people were already commenting there. We did put the comments up on the screen here, so feel free to drop a comment in the chat when you tune in, and we'll get into it momentarily. We are streaming this live on YouTube, Facebook, Instagram, and LinkedIn. And so give us just a second to go live on all the different platforms here. Hope everybody's been having a great week. All right, see some people commenting there. Amanda, Robert, Nicole, Mark, Matthew, Jason, Michael, thank you everyone for tuning in and commenting. All right, it looks like we are live on all the platforms, so we can go ahead and get started here. So welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every morning is pull up our pricing tool to go over the actual rates for different programs, the live mortgage rates. And then we do a deep dive into a different topic every day. Now, today's topic is going to be rehab loans. And when I say rehab loans, I'm not meaning fix and flip loans like we've talked about on previous shows. We're talking about conventional FHA, VA, and USDA rehab loans. So not loans for you to fix something and sell it, but to rehab something to live in it. And so we will go ahead and get into that shortly. But before we do that, Nick, let's go ahead and pull up our pricing tool to go over the rates for the different programs and see what the market is looking like this morning.
All right, let's get started. So yeah, it took me a minute to get all the example rehab quotes, but we have those all ready in a minute. So let me change my screen and we'll get into the live rates. So this is our pricing tool that is for our mortgage professionals. This will show us the general rates and APR with all the fees. For today, it is June 22nd, just after 11 a.m. So all of our basic programs are live. So this will show us the general rates and terms and APR. If you'd like a full breakdown, a full loan estimate of all the fees itemized that go into the APR, please get with one of our team members. We have over 300 licensed loan officers, and we can do primary and second homes in 24 states. And we can do our business purpose DSCR, which we love to do in 44 states total. So for all of our demos today, we will set up a basic scenario here. We will set the loan amount to $400,000. We will set the LTV to 80% loan, 20% down payment. We'll set the desired price to $99. That means we'll ask the computer to find the best rate at one discount point in cost. And we are going to compare our programs from conforming conventional. Then we'll check out our FHA options, and then we'll go into expanded guidelines, aka non-QM, where we have over 5,000 additional programs beyond the standard here. We do have VA and USDA. I do have an example for those later today, but we don't do those on the live rates. VA is only for eligible veterans and service members. So if you are eligible, please let us know. We'd be happy to quote it, no problem. And same with USDA, that's only for properties that are eligible in a USDA area. So if you do happen to be shopping in one of those rural areas, let us know. We'd be happy to quote it, but not everybody is, so we don't do those live. So we'll start with conforming conventional. We're going to do a purchase, 30-year fixed standard loan, primary occupancy, single family, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we will use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with these basic settings, let's check out the conventional rates today. Looks like it's the same as yesterday, 6.875 for 0.875 discount points and cost, and the final APR of 7.037. So remember, we have to use APR to compare apples to apples across the program, as that includes all of the fees for the different programs. So 7.037. I believe that's exactly the same as it was yesterday. Hopefully we see some more downward movement this week. Now, if for any reason our customer doesn't qualify for conventional or just wants to check out FHA in general, FHA is usually the next option. So let's go back to our pricer, set up the same exact scenario so it's apples to apples. And this time we will select FHA. FHA does allow a little more leniency on credit items as well as a higher debt to income ratio. So typically if a customer has a problem qualifying under conventional, FHA is usually the next best option. So we'll keep everything else exactly the same so we can compare apples to apples across the programs. So here the best option for FHA today, 6% rate, 1 discount point in cost, and that puts us at a final APR of 6.592, and that includes the upfront and yearly mortgage insurance that's required for FHA. So in this case, as we say every morning recently, actually FHA is a little bit cheaper for this borrower. So a customer that qualifies for both conventional and FHA maybe should consider FHA, because when we compare apples to apples with the APR, it's actually a touch cheaper here. And a good opportunity for our customers that need that extra leniency that FHA provides. It's actually a great deal now with some changes that the government has added recently. Now, if for any reason our customers don't qualify for FHA or conventional, many other banks or lenders don't have other options, but that's where we specialize here at the Mortgage Calculator, where we have over 5,000 other options under expanded guidelines, also known as non-QM. So we will keep everything else exactly the same, but if you notice a new option popped up, now we can select our income verification. So full doc is what we have to use for conventional and FHA. That's 2 years of tax returns, what most people are used to. So we will typically select a non-QM program to use an alternative method. We have asset-related programs. We have business bank statement programs. We have our investor programs we'll talk about in a minute for DSCR, for investment properties. Personal bank statement, 12-month, our most popular program by far for our primary home. RSU, stated, VOE, 1099, P&L, no income at all kinds of different options. But the most popular by far is the personal bank statement 12-month. And that's typically for our self-employed borrowers. Many times our self-employed borrowers with 2 years of tax returns have various write-offs and may not qualify at all or may not quite qualify with the amount of income they want. So these non-QM solutions or non-QM programs provide solutions for that by using a different income. So instead of 2 years tax returns, we don't use that at all. We simply use their last 12 bank statements to determine a debt to income ratio of 40% in this example case, using their actual cash in the bank statements. So many times our self-employed borrowers will qualify for double, triple, quadruple the income using bank statements rather than tax returns. So that solves the problem for them typically and is a great solution. So let's check out our non-QM rates this morning. So best option here at the top, 7.375 rate, 0.875 discount points and costs, and a final APR of 7.437. So remember, conventional was just over 7, and now we have a non-QM option using totally different alternative income that solves our borrowers' problems for just a touch higher rate. Non-QM is always a little bit higher on the rate, but this is very reasonable. We get very excited here at the Mortgage Calculator when non-QM is almost identical to conventional, because we love offering those alternative options and solving problems for our borrowers. These programs also solve other problems as well. So if we cruise down the sheet here, there's tons of different options. Some of these options that show a little bit higher rate may allow things like credit events, like a foreclosure or a bankruptcy. So please get with our team. They may find one of these other options that might have a little bit higher rate, but fits exactly for the problem we're trying to solve. So please get with our team. There's hundreds of different options here. Now, before we go into our rehab options, which is our topic for today, we always want to do live pricing for investment properties. So for our final 2 demos, we will change the occupancy to investment property, but we'll set up the same scenario, 80% loan to value, 20% down payment, everything else the same. And we'll simply compare our investment property options for conforming conventional to expanded guidelines, also known as non-QM. Remember, FHA, VA, USDA are not eligible for investments, so we will simply compare these two. First up, conforming conventional. Everything else will stay the same as all our scenarios. Notice all we've changed here is investment. So let's check out the conventional options this morning. And as I say every morning, remember the GSEs, the conventional quasi-government agencies that operate these programs, have added penalties for investment properties. So the best option the computer found, 7.125 rate for 3.5 discount points in cost. Unfortunately, there are no options for 1 discount point in cost because the programs have added loan level price adjustments or penalties here. So the final APR, 7.375, obviously a little bit higher than a primary conventional, but still a great option for our borrowers that qualify. However, many of our investors would like a higher rate, or don't mind, I should say, a higher rate if they can save discount points. So many investors want other options for less discount points. In this case, $14,000 is a lot of money that an investor can deploy into another investment, buy another property, whatever they want to do. So to solve that problem, we love to present our conventional if they qualify, no problem, and compare that to our non-QM option. So the final live pricing demo, we'll set up the same scenario as before, click on expanded guidelines for investment properties, and we have a couple new options to select. First, we need to select our income option. And our most popular by far, and our most popular loan by far here at the Mortgage Calculator is the DSCR loan, which is only for investment properties. And that's because it doesn't actually require any income or employment. We simply use the estimated rental income from the property we're purchasing in this demo to determine a DSCR ratio. It stands for debt service coverage ratio. So if the estimated rents cover the PITIA, the expenses of the mortgage payment, and the property cash flows on a monthly basis, that's a DSCR ratio of 1.00 or higher. We have a ton of options for those properties that cash flow on a monthly basis. We even have options for a DSCR ratio under 1.00, aka the property doesn't quite cash flow on a monthly basis. So tons of different options. We'll go ahead and delete this for our demo today. That way all the different options pop up. And the final thing we need to select is a prepayment penalty. 3 years is a standard for a non-QM investment property, so that's why we always select for our demos. We can select 0 if we like. That will limit the amount of loan programs and cost more money, so we don't do that in the live demo. And same with 5 years, that can save some money for our borrowers that are open to it, but it is not allowed on all programs. So in order to show all the different options, we'll select 3 years, which is the standard. So with these settings, let's check out the DSCR rates this morning. Wait a minute. These aren't the DSCR programs. Hold on. Something not get set right. Let me try this one more time. I want to set this up real quick since I'm not explaining it and see why this didn't connect here for DSCR this morning. Oh, for some reason, it's not kicking in my DSCR options. So I guess we won't have our DSCR option today since it's not popping up. It's popping up the other programs for some reason. So we'll have to get into our deep dive session. Let me go ahead and change my screen. And we'll get started. All right, so I have a few examples I worked up earlier for these. These are working, so no worries there. Basically, what we're going to do today is go over our rehab options. So remember, as Kyle said, these are not fix and flip. These are for primary homes only. Obviously, FHA, VA, and USDA are all only primary homes. We will show a conventional option, but again, this will only be for a primary home rehab option. So these are amazing programs. I love these. I've actually done these myself. So as Kyle. Allows you to buy a house in a good area, or the house in the area that you want, and then make it to your liking, right? So schedule the construction to your liking, get the finishes to your liking, all of that great stuff, as long as the values pencil out. So very cool options. These are obviously very good for today's market as well, when a lot of people have problems buying. We can actually buy a house that totally won't qualify for any loan. It could be burned down to the ground, to the foundation. And these programs are, obviously supported. All of these are, government programs, essentially. The FHA, VA, USDA are, and then conventional is government subsidized as well, to encourage basically us to, get borrowers to buy properties that need fixed, right? So these are programs that are out there to encourage improvement, reduce blight in neighborhoods, obviously. So these are great programs. There's no limits of the area or anything like that. When we talk about fix and flips for investors, totally different ball game. We're talking about primary homes, so we can use these in any area. And if you are shopping in a rural area, you can even use the USDA option. So all kinds of cool options that pop up when we're looking at the rehab. So let me go through some of the details. We'll talk about it. They are a little bit tricky. Definitely take a lot of time, effort, and work from, I know there's loan officers watching. Hopefully there's some borrowers watching as well. Everybody has to play nice together. And most importantly, the contractor has to play nice together. So there's, dozens of documents from all parties that have to get put in place in order to get one of these loans approved. So definitely one of the more difficult loans, but a lot of benefit here if you can succeed in this. And essentially in this market, we can buy a property that's unfinanceable and turn that into our dream home, essentially, right? So great tool for this market. Tomorrow, we're going to talk about one-time close, which is buying empty land and then building your dream home. Right now, we're talking about a property that already exists in some way. So it's a rehab, could even be burned all the way down to the foundation, but something existed. There was a home there in some way. We're going to fix it back to code, fix it back to current conditions, and obviously add your finishes to your liking if you're going to finish the home. So let me go ahead and switch my screen and pull up the examples. 1 second. All right. So first up on the list here, we have our conventional, it's called a home style renovation loan. So this is a Fannie Mae program. They call it home style. There also is the Choice Reno from Freddie Mac. Very similar programs. So this is the typical request. The home style renovation goes up to 95 LTV. Unless you're a first time buyer, you can go to the 97 LTV on the home style and Choice Reno. But this is the most common request we have. Someone trying to max it out for a primary home. So 95 LTV, we obviously need PMI. So I don't know if you guys can see it here, but our PMI in this case with our demo FICO, just like we used in our demos before, of a 760 FICO and a debt to income ratio of 40, we end up getting a PMI value of 122 in this case. And in this example, it's a 95 LTV. So what we mean there is a 95% of the final ARV, the final after repair value. So remember, whenever we're doing a renovation loan, we're going to get a appraisal on the property as it sits. If it's burned down to the ground, probably not going to get much value there. But then you're going to present your plans, your renovation, your scope of work to the appraiser, and they're going to look at it and they're going to say, oh yeah, you're going to build a brand new home. It's going to be beautiful. Here's the after repair value. And that's what we will use for the actual loan. So in this case, the purchase and renovation budget can add to the whole 95% of the loan, right? We still need to put some down payment in there and stuff because it's 95%, but that's of the ARV, and that will be our maximum budget for purchase and renovations. So for example purposes, in this case, we did a $500,000 value, 475 loan amount because we're putting down 5%. So for this example purpose, just to throw a number out there, it could be any combination of numbers that equal that, right? So these are a little bit complicated, a lot of moving parts. But for this example, to make it easy, this could be a $400,000 purchase for a home, maybe hurricane damaged or something, right? Maybe windows blew out, so you can't finance it with a regular loan. And it needs $75,000 in rehab budget to make it back to code, and obviously give your finishes to your liking if you want to do some finishes and stuff. So in this example, we have $475,000 total budget, which we got a loan for. We put $25,000 down of our own money, and the property is going to be worth $500,000 when we finish. Many times when we do these renovation loans, at least the ones I've done personally and the ones Kyle's done personally, you actually end up getting a higher value at the end. So it works out, right? Many times it'll actually appraise for $550 at the end, and you have some sweat equity basically from putting all these parts together, right? The renovation, the budget, the contractor. Obviously, you got financing. You've worked with your loan officer. All these pieces have to come together for this project to come to fruition. And most of the time, not all the time, obviously, but most of the time, when we put a lot of sweat equity in and stuff, we can actually come out with equity, at closing, essentially, once we're done. So great rate options here. There are a little bit funky. So you see here, I kind of skipped some rates, skipped around a little bit, but these are the best options. There are no quote unquote par options, no cost options when we have these renovations. So these are the best options the computer found. Closest to par or best option I found there, 7.375 rate. And the lowest buy down we could go, that's about 2.5 points of buy down there, is 6.625. So still some great options there, right around the same regular pricing of conventional. But of course, we get the renovation, so there's added risk. So a little bit extra cost, but similar rates. Now, let's go ahead and compare this to our government options, right? So the government options are going to go a little bit higher in LTV. So these are also common requests, but do have a little bit more hoops to jump through, I would say. So caution, there's a lot of hoops on any of these, but just know as we go towards the government angle, there's going to be more stuff to jump through. So first up, FHA. FHA calls their renovation program a 203K. There's a 203K Streamline, 203K Full. Streamline has a $35,000 or less budget. In this case, we're going with a big budget, so this is the full example. And remember, FHA goes up to 96.5, so most requests that we have for a 203K are going to be to max it out to 96.5. So that's what we have this example. And so 96.5, remember, the purchase and renovation can add up to 96.5. For example, there's going to be a 400,000 purchase, 82,000 rehab budget, and 500,000 after repair value. So similar to the other example, 500,000 after repair value, put down a little less because we're doing the FHA version, so 96.5 instead of 95. There are some fees and stuff that come in here, so remember, always compare your APRs. Even though the rates are a little bit lower, FHA does have the upfront and yearly mortgage insurance, which gets worked into the APR. So lowest cost option that we found here, 6.75 for the 203K, and they can buy it all the way down to 5.75. So great options for FHA. These are probably more common than the conventional options, I would say, and very similar in rules. But remember, this is an FHA loan, so FHA appraisal. Again, a little more hoops to jump through there. And obviously, you have to make the end home FHA eligible, which FHA does have some life safety and some other things, other hoops to jump through. So that's what you should consider there. Now, going into our VA for our eligible veterans and active service members, they get the benefit of 100 LTV. So just like the regular VA loans, we can go to 100 LTV. For a VA rehab loan, we can also go to 100 LTV. So that's typically the request we have when we get a VA request. So purchase and renovation can add to 100%. That's pretty cool. So for this example, with the $500,000 loan, we can actually do a $400,000 purchase with the full $100,000 rehab because we're financing the entire thing. So in this example here, again, $500,000 appraised value, $500,000 loan amount, we got the full budget. The lowest cost option, 7% rate for just over a point, it looks like they're in cost. Again, there are some costs on these renovations. And you can buy it all the way down to a 6.125 for just over 2 points in cost. So some great options for our eligible veterans and other active service members. Now, the final option, again, remember, USDA is only for eligible properties. So this has nothing to do with the person necessarily. USDA is for properties that are in a USD area. And remember, these programs are to improve, obviously, blighted neighborhoods and such. That's why they give you great options on rates and terms. And remember, USDA is only rural areas. So this is a program to rehab in a rural area. So remember, it still has to be in a USDA area. But if you do find one of those, awesome example here, you can go up to 100 LTV with USDA as well. So purchase and rehab get up to 100%. So again, just like the VA, we can go 400,000 purchase, 100,000 rehab, since we're getting 100% loan. And similar rates to the VA actually here. So lowest cost or lowest rate option here, 6.75 for just over 1 point, and the highest cost, lowest rate, 6.125 rate for just over 2 points of buy down here. So very similar to the VA there in the cost and structure. Remember, USDA is for properties in a USDA area. So if you do happen to be shopping there, you can pop into this program. If you're not shopping in a USDA eligible area, you're going to be stuck with the FHA or the conventional unless you're VA eligible, and then you can add the VA. So a lot of great options here. They're all very similar, but remember, these are hard loans to do. So for our team out there, make sure you buckle down, pay attention to all of the guides and tips and tricks that we have for those loans. And a lot of our partners have some tips and tricks as well. So those are tricky. I would love to help you guys set those up. And for our borrowers that do find an option to buy a house, typically, right, you want to buy the house in the best neighborhood, the worst house in the best neighborhood with the most work needing to be done, the more sweat equity you can put in, typically the better deal you're going to get on the purchase and the better deal you're going to get on the exit. So definitely recommend you guys all that are loan officers put this in your toolbox. And for borrowers out there thinking they're getting priced out of deals, thinking it's too competitive, change your mindset. Look for the worst property in the best neighborhood instead of looking for the best property that you love in the best neighborhood. Be patient, find the best option, right? The best location of where you want to live, and then build your dream home and just be patient, right? And then tomorrow, we're going to talk about one-time close, which is find an empty piece of land in the neighborhood you want to live and build your spec dream home from scratch. So totally different ball game there. Similar programs. We'll do the 4 examples tomorrow as well for one-time close. I don't see any questions here, Kyle, so I think you can wrap it up.
Yeah, I think we're good. Just keep in mind, again, these are not for investments, right? These are for actual primary homes, but we do have plenty of episodes that we've done on fix and flip and investment properties and ground up construction and all that. But again, tomorrow we'll do another great one on one-time close, which is just getting the empty land and building it, which is, again, also only for primary residences. So with that being said, thank you everyone for tuning in. We do this show 11 a.m. Eastern time every single weekday where we go through the live rates and then we do a deep dive into a different topic every day. So thanks everybody for tuning in. We hope to see you tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone take care. Everybody.